Now let's cross to Diamond Bank, where Thaddeus Udegbe, a fixed income trader, is standing by to talk us through the fixed income market and, of course, the currency. Thaddeus, thank you for joining us. Let's start by wrapping up the T-bill market, and I think interesting dynamics there. We're seeing T-bill yields, particularly for the 1 year, now testing 14%. That's the highest I've seen in a pretty long time, and I thought there was an expectation that yields were likely to trend lower, but clearly as the central bank continues to try to mop up liquidity, it seems yield, at least on the short end, seem to be trending higher.
Thank you, Wole, for having me. I think the treasury bills market has witnessed a big hive of activities this week, particularly at the open market segment and, of course, the foreign market. If you look at what happened on Tuesday at the open market, central bank offered 100 billion naira worth of treasury bills, 1891-day bucket, and sold 101 billion at an effective yield of 13.37%. And this basically affected or influenced sentiments at the secondary market as market turned bearish on Tuesday, and up to date we've seen a bearish market as a result of the open market sale of the treasury bills at those very high rates. And again, this very yield affected the NTB auction of yesterday. At yesterday's auction, CBN sold 24 billion worth of 91-day bill, right, 30 billion worth of 182-day bill, and of course 85 billion worth of 1-year bill at an effective rate of 10.62%, 12.86%, and 13.95% respectively. And if you also look at the bid cover ratio for the auctions, you find that they were above 100, which shows a successful auction. However, right, the bid cover ratios were below 2%, which shows that demand was not very aggressive.
What can we read into that reduction in demand? Of course, you said yes, the cover ratio is above 1, but clearly it's not as high as it used to be. So what exactly is happening there? Your thoughts on that dynamic?
Well, my personal thinking is that players are becoming very cautious in expectation, given the fact that the secondary market for treasury bills is bearish since this week, and in fact in the last 3 weeks we've seen a slightly bearish market, but it's intensifying this week, given what we've seen at the open market operations, where central bank is willing to sell at those very high effective yields. So we expect that sentiment to dominate the market this week. Right. So of course, today we have about 325 billion worth of maturities in the treasury bills market. Right. This we expect to provide a cushion to the market.
Right. Okay, so it seems that liquidity, the high liquidity has come to stay in a sense, because we've been hearing about this for weeks. So what does this mean for the outlook for T-bill yield? Do you think we're likely to see them stay at this levels or even go higher?
Well, to be frank with you, a lot of players in the market expect yield at the secondary market, treasury bills and bonds, to reflect what we are seeing at the money market end, because we've seen very high liquidity injections in the last 1 month in the market. However, CBN has been very aggressive at mopping up these liquidities to check pressure on the exchange rate. So we think that there is high liquidity, but CBN is being proactive in mopping it up, and which explains why money market rates are very low, at 10.25 and 10.5% on the average for some time now. So we're seeing that large disparity between money market rates and the yield on fixed income instruments.
What can you tell us?
In the market.
Right, Thaddeus, what can you tell us about the foreign investor interest, though? I mean, I imagine that if the 1 year is at 14%, that's perhaps where, or close to 14%, that's perhaps where they will be putting their money. But clearly, there's also the search for duration as well. So can you talk us through where you are seeing the most foreign investor interest across the yield curve?
Clearly, on the treasury bills market, we've seen reduced interest, which explains why yields are very high. However, now that yields are coming up, we think that those foreign interests will come back. I think they were expecting higher yield, and it's already beginning to play out. So I think they should come back in the next couple of weeks, and then we'll begin to see yield stabilize at this level of 13% or 12% effective yield. However, at this bond segment, we've seen mixed trading interest in that segment of the market, which shows that some players are still buying, while some are taking profit. So it's just a mixed trading interest. Some people are buying, some are selling, and that is why we have some stability in that segment of the market, with yield at 11.2 to 11.5% across the actively traded bonds.
All right, let's shift our focus to the Naira. Some weakness witnessed this week. I hear it's testing 159 to the US dollar right now. So talk us through what is going on there. And I particularly want to get your thoughts about the intervention we're seeing from the central bank. Clearly, they intervene regularly on Mondays and Wednesdays, but I also heard that on Tuesday, they also intervene directly into the interbank market by selling to some banks.
In recent weeks, we've seen demand pressure at the FX interbank market, and this demand pressure continued this week. On Monday, for instance, when you look at the interbank market rates, the market opened at 158.70 on offer on Monday, and then traded stable on that day. On Tuesday, it got to 159 level. Of course, CBN intervened when it got to 159.10 on offer, and then through its special sales to participants at the two-way put market, that brought back the level to 158 levels, where it closed on Tuesday. Now on Wednesday, it got back to 159 levels, even though there was auction on that day, WDAS sales.
Right.
That did not really impact sentiment at the interbank market for FX. So we saw it close at 159 levels. You will agree with me that we've seen some demand pressure on the interbank. However, at the WDAS segment, we've seen some stability. On Monday, CBN offered $300 million and sold $246 million on Monday. And then on Wednesday, it offered $300 million and sold $272 million at same rate of 155.75.
All right.
So if you look at statistics that we have now, you find that there is stability at that segment of the window at the WDAS. However, we're seeing pressure on the interbank market.
But in the past, Thaddeus, we've seen a situation where some people front load demand, if you like. They bring their demand forward because of the expectation that the Naira will weaken. Are we seeing any sign of that right now? Because recently the oil prices fell below $100 per barrel. That could get some people jittery. So are we seeing any reaction to that?
Well, for the data I have, I don't think players are I don't think importers are front loading demand. I think the demands are very real. Because a number of players believe that, looking at what CBN has done in the recent past, through the special intervention window and all that, we believe that the CBN has the capacity and is also willing to maintain the exchange rate at its exchange rate target of 155 Naira plus or minus 3% to the dollar, within the next couple of weeks. So the speculation that the currency would go beyond this level is something I don't subscribe to. Of course, like I told you earlier, the currency at the interbank market is struggling to get to 160, but CBN special intervention has kept it at the level we are seeing it today at 158, 159 level.